While you were sleeping on Tuesday, February 24th, 2026, the United States Supreme Court handed you a massive multi-billion-dollar tax cut. And the craziest part? The IRS didn't tell you. The media is totally focused on the political drama between the White House and the Chief Justice. And your financial advisor? They're likely still scratching their heads over a 60-page legal opinion. We are talking about a $175 billion legal bombshell that completely changes the price of everything you buy, from the iPhone in your pocket to the car in your driveway. For the last year, you've been paying a hidden, invisible sales tax. It was baked into the price of literally every imported item in your home. It was called the Liberation Day tariff, but in a historic 6-3 ruling, the Supreme Court just declared that tax totally illegal. But here is what they don't tell you. The government isn't going to just mail you a check. No, that $175 billion is currently the subject of the biggest corporate legal brawl in history. FedEx has already filed a lawsuit seeking a full refund. Amazon, Walmart, and Apple are right behind them. And while everyone is arguing over the past, the president just triggered a brand new 10% global tariff under a completely different law. You have exactly 150 days before the next major economic earthquake hits. In this video, you're going to learn exactly how this ruling puts money back into your pocket. By the end, you'll have a step-by-step plan to front-run the upcoming price hikes, a list of stocks that are about to receive a massive cash injection, and the specific date in July 2026 that could crash or skyrocket your portfolio. Now, I've spent the last 72 hours buried in trade law. Why should you trust me? Because I'm not a politician. I'm a data nerd who obsesses over invisible taxes. I learned the hard way that when the government moves $175 billion, there is always an opportunity for the person who sees it first. Let's start with a truth no one wants to admit. Tariffs are not paid by China. They aren't paid by Japan or the European Union. They don't write a check to the U.S. Treasury. A tariff is a tax paid by the American importer at the border. Imagine a $1,000 mountain bike from Taiwan. Under the old tariffs, the importer had to pay a 25% tax the moment that bike touched American soil. That's $250 paid to U.S. Customs. Now, do you think that bike shop is just going to swallow that $250 loss? Of course not. They mark up the bike. They take that $1,000 bike, add the $250 tax, add their profit margin, and suddenly that bike costs you $1,500 at checkout. For the last couple of years, your cost of living has been artificially inflated by a tax the Supreme Court now says the president had no authority to collect. On February 20th, 2026, the legal world changed. The case was Learning Resources, Inc. versus Trump. The company argued that the president abused a 1977 law called the International Emergency Economic Powers Act, or IEPA. IEPA was designed for wartime emergencies, freezing terrorist assets, but the administration used it as a backdoor to tax normal consumer goods without asking Congress. The court ruled 6-3 that the power to tax belongs exclusively to Congress. They told the president, you cannot call a national emergency just because you want to raise taxes on imported sneakers. In legal terms, this means the old tariffs were void ab initio. They never legally existed. This is why that $175 billion refund is now the most hunted pile of cash in Washington. On February 23rd, FedEx filed a massive lawsuit. They want every single penny they paid in illegal tariffs back, with interest. Think about where that money goes. Large retailers like Walmart and Target overpaid by billions. Tech giants like Apple, HP, and Dell, automotive parts that make your car run. But here's what they don't tell you. you, the government doesn't have $175 billion sitting in a vault. President Trump called the ruling ridiculous. The Treasury will fight these refunds for years. But for investors, this refund is a massive catalyst. When FedEx gets a billion-dollar windfall, they don't lower your shipping prices. They do stock buybacks. They buy back their own shares, reducing supply and driving the stock price through the roof. This is essentially a second corporate tax cut for 2026. The Supreme Court killed the old tariffs on Friday. By Tuesday at 12:01 a.m., the president found a loophole. He invoked Section 122 of the Trade Act of 1974. This is where it gets tactical. Section 122 allows a temporary 10% global tariff, which the president wants to raise to 15%, but it has a built-in kill switch. The law says these tariffs expire in exactly 150 days unless Congress votes to extend them. This is not permanent. It's a 5-month window. The net positive, even with the new 10% tariff, your total burden dropped because the old 25% duties are gone. Think of it like this. Your boss gave you a 20% raise, but accounting took 10% back. You're still annoyed, but you're still 10% richer than last week. The risk? The president is working on an executive order to raise that 10% to 15%, possibly within weeks. Let's look at what gets cheaper and what stays expensive. First, understand Section 232 and 301. The Supreme Court didn't touch these. The 50% tariffs on steel and aluminum are still in full effect. If you're building a house or buying a truck, your costs are not going down. But consumer electronics, apparel, furniture, and toys, these were the primary victims of the IEEPA tariffs. Tech, if you've waited to buy a new MacBook or gaming PC, the Liberation Day tax is gone. Even with the new 10%, the tax is significantly lower than last month. Apparel, most clothing is imported. Expect New Year, new prices sales as retailers get shipments under the lower 10% rate. Furniture, almost all furniture is imported. Prices should moderate, though not instantly. Retailers need to sell old inventory first. Toys, remember Learning Resources, the company that brought the case? This entire sector gets margin relief. The world is reacting in real time. The European Union postponed a major trade deal, not a small delay, a major signal. They want stability. Uncertainty there means uncertainty for European stocks and the euro. India deferred talks indefinitely. They want to know, will the U.S. have tariffs in 6 months? Japan watches quietly. Japanese automakers calculate whether to import more or expand domestic production. China waits us out. They know the 150-day clock. They know Congress might let tariffs expire. They're not conceding for temporary policy. For you, the volatility. Nervous supply chains lead to preemptive price hikes. Here's the controversial take. Even though the tax is lower, some stores might raise prices temporarily to build a legal defense fund against the possible 15% hike. Here's your 3-step action plan. Step 1, the front-loading strategy. The 10% tariff is active now. The move to 15% is coming. If you're buying a major imported car or major appliances, do it now. Every day you wait gets closer to that 15% maximum. Step 2, the stock market refund watch. Watch import-heavy mid-cap stocks. Giants like Amazon are too big to move on one ruling, but a mid-sized retailer getting a $50 million refund, that's a massive catalyst. Set Google alerts for tariff refund lawsuit plus company names. Step 3, the July 24th milestone. Mark your calendars, that's when the 150-day limit expires. Scenario A, Congress deadlocks, does nothing. The 10% tariff vanishes. We'll see the biggest consumer gold rush in a decade as prices plummet. Scenario B, Congress extends tariffs. Prepare for long-term inflation on imports. Make major purchases before that boat. Let's look at the math for a small business owner. Last month, bike cost $1,000, IEEPA tariff 25%, $250. Total border cost, $1,250. Today, bike cost $1,000. Section 122 tariff, 10%, $100. Total border cost, $1,100. That's $150 savings per bike. Import 1,000 bikes a year. The Supreme Court just gave that owner a $150,000 raise. That's not a check in the mail. It's the removal of an anchor on the economy. But here is the trap 99% will fall into. On Tuesday, the 10% tariff came into effect at 12:01 a.m. If you ordered Monday that arrived Tuesday, you are in a legal gray zone. Thousands will argue which rate applies. As an e-commerce seller, do not change prices yet. Most sellers will panic, drop prices too fast, forgetting the 15% hike looms. Wait for the market to settle. Let's go sector by sector. Automotive, European or Asian vehicles, old 25% tariffs on components are gone, new 10% remains. Steel and aluminum tariffs stay in full. A BMW from Germany, cheaper than last month. An F-150 made with American steel, not much change. Electronics, the clearest winner. Smartphones, laptops, consoles, all heavily imported, all hit hard before. The next few months are your window before potential 15% hikes. Construction materials, here's where people get hurt. If you hear tariffs struck down and assume renovations get cheaper, no. Lumber, mostly domestic. Steel, still 50%. Aluminum, same. Concrete, drywall, insulation, domestic. Don't start projects expecting bargains. Consumer goods, apparel, footwear, toys, furniture, luggage, sporting goods, all the stuff filling American homes. These sectors were crushed, and now breathe easier. Watch for price drops over 60-90 days as old inventory clears. The international reaction affects everything from groceries to your portfolio. The EU postponed a major trade deal. Not a small delay, a major signal. They want stability. Uncertainty there means uncertainty for European stocks and the euro. India deferred talks indefinitely. They want to know, will the U.S. have tariffs in 6 months? Japan watches quietly. Japanese automakers calculate whether to import more or expand domestic production. China waits us out. They know the 150-day clock. They know Congress might let tariffs expire. They're not conceding for temporary policy. For you, currency fluctuations, stock volatility, supply chain disruptions, prices can rise short-term, even if long-term trends are down. The messy middle of economic transitions. Preemptive price hikes example, a retailer has old inventory bought at 25% tariff. New shipments cost less at 10%, but they still have expensive old stock. Do they immediately mark down? Probably not. They hold prices to clear old stock profitably, then gradually lower as new inventory arrives. Consumers might not see benefits for 30, 60, even 90 days. Meanwhile, the 15% threat might cause suppliers to raise prices preemptively, building a buffer. It's messy, nonlinear. Be patient, but informed. Now, deeper on the refund battle. FedEx filed first. They're not messing around. Top legal talent, asking for every penny with interest. But here's what most miss. FedEx also potentially collected tariffs from customers and passed them along. Who deserves the refund? That's complicated litigation for years. The government argues refunds should go to consumers, you and me. Good luck with that. Companies argue they paid, they bore the burden, they're entitled. Courts will sort it. But for investors, timeline matters less than certainty. Eventually, this money returns to the private sector. Eventually, companies have billions in unexpected cash. Historically, they return it to shareholders via buybacks and dividends. The bull case? 12 to 24 months refund wave. Companies announce massive share repurchases, stock prices rise, 401k balances increase, the economy gets liquidity not priced into any forecast. The bear case? Government fights a decade. Courts move slowly. Legal fees eat refunds. Uncertainty causes cash hoarding instead of investment. But even in the bear case, money eventually comes. It's just when. Is this real? February 24th, 2026? Based on current law, pending cases, public statements, things can change. The court could rule differently. Congress could pass new laws. The president could find another loophole. But the framework, how tariffs work, distinctions between trade laws, the 150-day window, that framework serves you regardless of headlines. The game is always the same. Government collects, Corporations pass costs to you. Informed consumers keep more money. Imagine two families. Family A hears news, shrugs, goes about their day. Family B watches this, understands the window, moves up planned purchases. Family A waits until September 2026. By then, if 15% hike hit and Congress extended, they pay thousands more. Electronics at holiday prices include higher tariff. Family B buys April or May 2026. They get the car at 10%, maybe negotiate better as dealers figure out the new normal. They buy TV and laptop in June before any hike. They save 5 to 10% on everything, $2,000 to $5,000 depending on spending. That's the power of being informed. That's understanding the ticking clock. The calendar. February 24th, 2026, day one of 10% regime. Count forward 150 days to approximately July 24th, 2026, a Friday in late July. Between now and then, first, the executive order raising the rate to 15% could drop any moment. The president signaled it's coming. It could be next week, next month, or delayed. Assume it's coming. Second, refund lawsuits multiply. After FedEx, a flood of filings from every major importer. Courts consolidate cases, assign judges, set schedules. Third, Congress debates extending Section 122 tariffs beyond 150 days. Major political fight. Some argue expiration is a middle-class tax cut. Others argue extension protects American jobs. Outcome? Genuinely uncertain. Fourth, international negotiations heat up. EU, China, Japan, India all pressing for clarity, offering deals, making threats. Global trade landscape shifts real time. For you, the investor and consumer, stay alert, check your portfolio, watch news with a critical eye. Be ready to act when the window opens. What if you ignore all this? Most people will. Most see headlines, nod, and go back to life. They buy what they need when they need it, paying whatever price on the tag. They won't connect that price to a Supreme Court decision or a 1974 trade law. They'll just swipe their card. That's exactly what government and corporations count on. They count on you not noticing the math. They count on you focusing on political drama, who said what about whom, while they figure out how to keep your $175 billion. Don't let them. Don't be the person looking back in 5 years, realizing you overpaid by thousands because you weren't paying attention. This is rare. The Supreme Court doesn't strike down major tax policies every day. A $175 billion refund battle doesn't happen every decade. A 150-day window with a built-in kill switch doesn't come often. The people who understand this moment, who learn the mechanics, watch the calendar, make intentional decisions, those people come out ahead. They buy cheaper, they invest smarter, they keep more of what they earn. That's the whole point. That's why I dig through trade laws and court rulings. Not because I love reading legal documents, but because the math matters. The math right now says there's an opportunity. Let's recap key points. 1. The Supreme Court struck down old Liberation Day tariffs as illegal. They're gone, void ab initio, never legally existed. 2. This creates a $175 billion refund battle. Companies sue to get money back. When they win, that money flows into stock buybacks and dividends. 3. A new 10% global tariff took effect under Section 122, but it's temporary, 150 days unless Congress acts. 4. The president wants to raise to 15% by executive order. Could happen any day. 5. Winning sectors? Consumer electronics, apparel, furniture, toys. Expensive sectors? Anything with steel or aluminum due to separate tariffs. 6. Your action plan? Front-load major purchases before the 15% hike. Watch mid-cap importers for refund-driven stock pops. Market July 2026 when 150-day clock expires. 7. Don't try to change prices too fast if you're a seller. Don't expect construction costs to drop if you're a buyer. I want to hear from you. Comment below if you've noticed prices changing. Are stores discounting electronics? Have you seen tariff relief sales? Or are retailers holding prices steady, pocketing the margin?